Interest rates drop, builders are nervous, and seller concessions are back, making this a humongous open door if you're a buyer. This is the weekly report on Major Money Matters. Welcome to Major Money Matters. My name is Major. I'm a mortgage broker powered by Edge Home Finance. If this is your first time to the channel, I do recommend that you like, comment, and subscribe so that you get weekly updates just like this when we talk about the market, what's going on, and how it may be affecting buyers and sellers in this market. So a couple of things I want to run through really quick here to let you know some shifts that we're seeing in the market. And the first thing I do want to talk about is interest rates. Now, if we look at interest rates, I want to highlight this article here from CNBC. It says mortgage demand drops to a 22-year low as higher interest rates and inflation crush home buyers. So I really like picking on, CNBC because their headlines are usually pretty dramatic. And the truth is, interest rates are up, but are they crushing people? No. There are a lot of people still making purchases in this market because really it is still a good time to buy. And I'm going to prove that to you really quickly. I'll post this article in the comments so that you can see it and you can read it. But one thing it said in there is that mortgage rates have not changed very much this week. And this was posted on the 20th to CNBC's credit. But near Thursday and Friday, there was a lot of shifts in the market and in mortgage rates. So I want to cover that. And by the way, in this video, I am going to highlight for you exactly, numerically, where interest rates are for a couple of scenarios that I isolated, okay? So first things, let's look at the mortgage rates. So I want to take a look at first this shot here. Now, if you follow this channel, keep in mind that this chart shows the sale of mortgage-backed securities. As this chart is trending down, that means interest rates are going up. As this chart is trending up, that means interest rates are going down. So you see a very straight downward turn there from about January to about, I guess, the end of May. Then you start seeing some bounce back and some volatility. Interest rates actually peaked as we look back at this chart around the middle of June, around June 14th. That was probably the worst time looking back to lock in an interest rate. You see that dip, that the bottom of this chart here is probably at about June 15th. And then we start making a bit of a comeback and a bounce back with a little bit of volatility. And if we look at this chart here, our second MBS chart, this is pretty much zoomed in from May to, showing from May to July. And, again, we see interest rates pretty much being at this lowest point around the middle of June, around June 14th. By the way, that coincided, if you haven't been following us, that coincided with the inflation report from the month of May. The market really reacted to that, and that's when we ended up some really bad interest rates. Now we start to recover there when the Fed raised the Fed funds rate. So that's where you see that bounce back there. And now I want to zoom in here so you see what happened this week. This is a chart for basically the last, for the month. So this goes back to the beginning of July. And I really want you to take a highlight here and focus on these on this big green bar. By the way, each one of these bars, whether it's red or green, these candlesticks, as they call, they represent 1 day of trading. So on this past Thursday, we gained 65 basis points, which is good for mortgage rates, which means rates went down. And then Friday, we ended up kind of, that cross that you see kind of there. Friday, we ended up about 25 basis points, then we closed on Thursday. So rates actually went down. So I want to take some time and I want to show you exactly some scenarios of where rates are numerically. Number one, we take out a scenario here, and what I did, I'm a broker. I broker to I won't get into numbers here. I broker to many different companies based on certain scenarios. And this is one of my better lenders here that I looked at, that I try to send business to because their rates are the best, their speed and their service to the clients amazing. So I wanted to look at really some scenarios here and seeing exactly where interest rates are. So the first one we take a look at is a VA loan, $700,000 purchase in Hawaii. Now there are about 20 to 25 different things that affect interest rates, and I had to narrow them down. So all of these scenarios is basically with a 760 FICO score, no lender points, no fees. So there is no buy down in these scenarios here. So and there's no points being paid for these scenarios. This is what we call the par rate. So first one I take a look at is a VA loan. We got a VA loan with a $700,000 purchase price. So Hawaii is the state. Interest rate about 4.4. So that's the par rate at 4.4. Really looking great. A little bit higher than we've been, but certainly not terrible. Okay, next one, VA loan, $1.1 million purchase. I wanted to throw a jumbo loan in here so you get a sense of where those rates are. Now, these are where I'm pricing rates. This is not for everybody. Different lenders have different pricing. If you want to call me, see if you can get a quote, give me a call, give my team a call, send us an email. We'll let you know where we are. So, VA loan, $1.1 million purchase in Hawaii. Again, 4.485. That's the par rate. So, pretty good. Now, these are not APRs. These are just the flat interest rate. APR takes into account all the fees that's paid into the loan, the title fees, escrow fees, prepaids. These are not with any lender fees. So I'm not charging the fees. The title fee is going to charge a fee. You're going to have to pay prepaids. That goes into the APR. But these are just where the interest rates are. So that's at 4.485. Next up, we have a VA loan. Give a shout out to my Texas folk. I'm still in Texas right now. It's still hot. But VA loan at a $300,000 purchase with a 660 credit score and no points and no fees. We're still at 4.98, still under 5%. When I know there are other lenders that are pricing things that are crazy. I've seen some of those loan estimates, but still at 4.9% at a 760 FICO score. Even if you had a worse FICO score, you're not going to be far off from that. So pretty good there. Then a VA loan at a $600,000 purchase in Texas, 4.74, $600,000, 4.74 purchase loan, no points, no fees. So 4.7, still looking good. Let's take a look at some conventional loans. Conventional loan, $300,000 purchase, 3% down in Texas. Purchase loan, 760 FICO score, 5.4. So, if it's 2 years ago and somebody's saying, hey, I got a 5.4 conventional loan, people are going to be like, yeah, that's pretty good. It's just that we've been basically spoiled in the last 2 years. So 5.4, $300,000 purchase price with 3% down. I do put on here, the PMI. Because people sometimes call me up and they said, hey, Major, I really don't want to pay PMI. This scenario, you're paying $65 a PMI a month. That depends on the lender, again, with that PMI. This lender has excellent PMI rates. So only $65 a month in PMI. That's literally, you got a family of 4, that's a night out to dinner, probably less than a night out to dinner. So, we're looking good. And then conventional loan with a $500,000 down, 10% purchase. Again, for Texas, you're at about a 5.9. I did run the rates here with 20% down. You're at about a half a point lower, 5.4, 5.5 in that range with 20% down. So conventional loan still under 6. And then FHA. Wanted to give FHA, my FHA buyers some love. We're at $400,000, 3% down, 3.5% down FHA loan, $400,000 Texas loan purchase, you're at 4.915. So rates, they're not crushing people. There are still people who are very well qualified to buy in those scenarios. Last 2 things I wanted to cover before we wrap up here. Builders are nervous. There's this article about builder sentiment. A couple of weeks ago, I talked to you about sentiment is simply how people feel about a particular thing. Builders are getting nervous because they're seeing interest rates rise, and they're seeing not as many buyers. So you're seeing builder concessions come back in a big way. I saw this ad a couple of days ago, where builders offered 4% to real estate agents. Even Lennar, who, during the pandemic, they were offering like 1% to real estate agents for bringing buyers there. They're back now to 3%, and because they're simply running out of buyers. I went by a place. Me and my wife are building a home in Texas, and we went by another builder just to have a conversation with them. We saw there was townhouses that are being built on a lake here in the DFW area, and I went by that builder and talked to them, and they're giving $50,000 in concessions in DFW. And I'm like, this is absolutely insane. Now, I have pre-approved buyers, and sometimes I end up competing with the builder's lender. But if you tell me the builder's lender is offering you $50,000, you can use it any way you want, guess what? I'm going to tell you to take that deal, and then I need you to let me know more, because I probably want to buy one of those properties also. But they are giving $50,000 in concessions, and that's just how the market has shifted, and builders are getting more and more nervous about what's going to happen in this market. I'm still pretty confident about what's going to happen in this market. I think people are still going to be qualified to buy, and I think we're going to be fine in the long term. Last thing I want to cover with you is seller concessions are back. And I looked at some of my contracts, or people I have under contract right now, and I want to run through a couple of these just to let you know that, some cases, people are getting a lot of help in seller concessions. I have a buyer here who are getting $12,000 in closing costs. Another buyer getting $3,000 in closing cost assistance. Another buyer getting, they're moving up the date to accommodate the buyer. The sellers have kind of realized that, hey, we don't want to go back on the market, and the scales have kind of tipped in the buyer's direction. I'm not saying we're in a buyer's market yet, but sellers don't want to fall out of escrow. So I'm not telling you you're in a position where the buyer can offer $50,000 and win the offer. I don't think we're there yet. I mean, you might get a needle in the haystack situation, but sellers don't necessarily want to go back on the market, and they're pretty much working with the buyers more and more. I have another seller who is paying all repairs, including a new roof. So seller concessions are back in some markets and in some situations. There are other situations where, there's just still a massive amount of competition. But if you're a buyer in this market, I will tell you that right now, whether you're buying a new build or whether you're buying from a seller, with interest rates being where they are, but have peaked, we haven't seen, we're coming back off those highs in the middle of June, and we're bouncing back a little bit. I think this is still a great time to get into this market and buy a home. Me and my wife are still buying rental properties. We believe in real estate in some select areas. DFW is one of those areas. We believe in San Antonio. So we're looking at buying other properties because we believe in basically drinking the Kool-Aid that we're encouraging others to drink. Getting into a house right now is probably the best idea to do, especially with rents being so high. So that's it for this week. We'll see you next time. Hopefully you got the real truth about interest rates. All right, if you want a quote, reach out to my team, give us a call. We'll let you know where rates are, whether you're actually getting a good deal. We want to make sure you're well taken care of. We'll see you next time on Major Money Matters.